consumer credit system allows customers to borrow money or incur debt and to defer or spread the repayment of that money over time. Having credit enables consumers to buy goods or assets without having to pay for them in cash at the time of purchase. Today, most successful economies are driven by credit. Now, the provision of consumer credit has a key economic function and is a largely beneficial activity, propelling spending and thereby increasing income levels of a country. We will focus on why consumer credits matter, credit ratings and scorings, and the roles credit bureaus play in Nigeria. Welcome to Business Insight and PlusTV Africa. I am Justin Akadonye. Before we get into the discussion proper, here is a highlight of stories which made headlines in Business Nigeria this week. Take a look.
Following the recent incident of vandalism which have affected power supply in Nigeria, the Federal Executive Council has approved power shoring project for the Transmission Company of Nigeria worth billions of naira in the south and in the north. This was disclosed by Minister of Power Abubakar Aliyu after the Federal Executive Council meeting presided over by Vice President Yemi Osinbajo on Wednesday at the Presidential Villa, Abuja. The minister said the project will boost the capacity of TCN and also respond more efficiently to vandalized assets. The House of Representatives has resolved to investigate payments for subsidy on petroleum products, especially premium motor spirit, popularly known as petrol, under the regime led by the President Muhammadu Buhari. Speaker of the House, Femi Gbajabiamila, is to set up an ad hoc committee to investigate the petroleum product subsidy regime from 2017 to 2021, which is to report back to the House within 8 weeks for further legislative action. The probe is based on a motion titled Need to Investigate the Petroleum Product Subsidy Regime in Nigeria from 2017 to 2021, which a member of the House, Sagios Ogun, moved at the plenary on Wednesday and the lawmakers unanimously adopted. Revenue allocation to federal, state and local governments has declined from a peak of 970.57 billion naira in July 2021 to 680.783 billion naira in May 2022, representing a 30% reduction over the period. The decrease in allocation to these levels of government reveals the fiscal challenges facing various levels of government in Africa's biggest economy. Nigeria earns its biggest revenue from crude oil, but it has paid 2.1 trillion naira in the first 6 months of the year and could pay another 4 trillion naira by the end of the year, according to the International Monetary Fund estimates. The Federal Communications Commission (FCC) of the United States is beaming its searchlight on the operations of a popular video sharing app, TikTok. The U.S. had demanded that app stores owned by Google and Apple take down the Chinese app. The long-drawn battle between the American government and TikTok dates back to the administration of Donald Trump. Trump had directed that TikTok be either deleted or the Chinese app sells its U.S. operation to an American buyer or investor. The administration of the current president, Joe Biden, has also been critical of the video sharing app.
The availability and ease of access to credit is represented by the level of credit penetration. This is measured by the ratio of total credit to the private sector to the GDP. This is relatively low in Nigeria, and it underscores the challenge of access to credit in Nigeria. I had a chat with the CEO of CRC Credit Bureau, Dr. Tunde Pukbola, as he gave useful insight on credit penetration in Nigeria, ratings, and the roles of credit bureaus. Take a look. Well, thank you so much, Dr. Tunde Pukbola, for joining us on Business Insights on PlusTV Africa.
Thank you very much for having me.
All right, let's start with consumer credit and why it matters. Can you tell us more about it?
Consumer credit is all about, giving opportunity to individuals in the country to have access to credit so that they can enjoy the basic things of life. they can buy things they need to buy. As human beings, we have things we need for comfort. There are things that are compulsory we must have, like shelter, like food and housing. But there are other things we want to enjoy even within the confine of those three things, like television, fridges, automobiles, and all of that. And consumer credit come within those concepts. So the ability of an economy to ensure that people have opportunity to have access to all of this, even when they don't have enough savings to do that at the time they need it, is what consumer credit is all about, is to propel everyone in the economy to be able to live good life by having access to basic things of life, which they can buy on credit, and then they can then pay over time based on their earnings and their capacity to repay their loans. So it comes in form of credit cards, it comes in form of overdraft, it comes in form of basic short-term loans. So that's what consumer credit is all about. Sometimes when you want to save to be able to achieve something, it takes you longer time, and you have even lost the opportunity to be able to do that. And then sometimes it's just difficult for you to put that resources together in lump sum at a go. And so when you have consumer credit, it then enables you to quickly enjoy those things, and then you have the privilege to then pay over time for them. What that does is that stimulates consumption, because people then can go out there and buy whatever they want to buy. And once it stimulates consumption, it then also stimulates demand.
So consumer loans have increased in recent times. How has it in any way affected GDP of Nigeria?
Nigeria went through a recession as a result of the high dependence on oil as a source of revenue. Because the price of oil fell, then we went into recession. Immediately after that, COVID came in, and people were not able to go to work. Now, all of that affects employment opportunities. And so, because people were out of job, it then reduces their ability to even, save, talk less of borrowing. You won't be able to borrow if you don't have a job. So it's all about cycle. But recently, we are out of recession, and then we are gradually, growing now. And so currently, I think our economy, the GDP has moved to over almost about $440 million, billion dollars or so. And that's something to say, okay, yeah, we are coming back to production. And what that then does is that people are back to work. Some level of employment has been sustained, and then people can then go back to borrowing to be able to do things they want to do for themselves. And you see it in the statistics of the number of individuals that now have access to credit or that have enjoyed credit over time. There was some level of decline during COVID era and when we were in recession. Okay, but now virtually all financial institutions now have very good credits, consumer credits and retail loans, desk.
Can you tell us the level of credit penetration in Nigeria and how accessible it has been over time? Okay,
so that speaks to the other question about, have we grown the economy through credit? Because credit penetration has also improved. Mm-hmm. It's not where we would like it to be. It's gone to about 14% now, between 12 and 14%, and it's measured by, size of credit to the private sector, domestic credit to the private sector as a proportion of GDP. That's how it is measured. Now, so it's moved for around 12%. By the last statistics was about in 2020. Now, we were coming from around 4%. So there have been some, it has grown in leaps, 4% toward 2010, 2011. Now around 12%, 14%. So it's some level of growth, even within the concept defined, within the scope of the fact that there have been a recession, there have been COVID issues that affected the economy, we still have gone up to that level. But that's not where we should be. Economies like even Kenya is over 30%, Malaysia is over 80%, you know, those are the countries. South Africa is almost 100% of GDP, which means a typical South African enjoys credit. It means a typical, at least 30% of the population of Kenya enjoy credit, as opposed to like 12% that we have in Nigeria.
Recently, there has been a proliferation of online lenders in Nigeria, and many Nigerians have actually fallen victim. There seems to be a gap. What more do you think can be done? I know the federal government has wielded the big stick through the Consumer Protection Agency, but what have we failed to see as a country?
Okay, so, technology is a driver of things that we see happening around us now. So once we have the apps, the fintechs come on board and they develop applications that can make it easy to give credit, to advance money to people right on their phone or through the internet, then it makes it easy for them to do that. So, and in most climes, that's the way it is. It's now left for government to be able to put some regulations in place as to who can do what and who cannot do what. What we have done in Nigeria is that we have allowed these operators to be ahead of regulation. In most instances, regulation comes before you allow them to practice, okay? But we don't have that in Nigeria. We allow the operators to come in, they introduce app, people download the app, and then before they know it, they run into problems. Because they are not regulated, they can do anything. Okay? Unlike a bank that is regulated and knows that once it does anything wrong, they will be penalized, including withdrawal of license. So they won't do that. So I think the failure, first of all, is that we do not regulate. That's the first one. The second one is because people still find it difficult to take money from commercial banks. So and that suggests to you that people are really in need of loans, but they still don't have opportunity to be able to access loans. And so they go to, access this, what we call hot money, on expected high level of interest charges, embarrassment when you fail to pay. Even if you default for 1 hour, you are in trouble. And I don't think anybody should allow that to happen to people in Nigeria, because it has a way of demoralizing. It has a way of, negatively impacting self-esteem of Nigerians. Let's
talk about credit reporting and credit scores. Just how far has it affected, the ability to lend in Nigeria?
Okay, maybe we could say from 1991, when the central bank, established the first credit risk management systems, what they call the CRMS. That was in 1991. That was the first time CBN said, okay, you know what? There is a high level of bad loans. Secondly, banks don't want to lend because they don't know you, they don't know how to profile you, they need information about you, and they came with what they call credit risk management system. And with that, all banks in Nigeria are meant to submit information about all borrowers, everyone they have given credit to the central bank. Say central bank establish a system where you supply that. Once that loan is up to 1 million and above, you have to supply. But then it met with little success, because first, banks don't trust regulators. Secondly, because it's all about 1 million and above, and there are quite a lot of loans in those days, that are below that amount. So it didn't work well. So we fast forward now to 2008, when the CBN discovered that what happens in other climes is that they allow the private sector to take charge of this. It's about making information available to creditors, to lenders, so that they can profile individuals and businesses that they want to give money to. And it comes from the philosophy of, does he have the capacity to borrow?
Creditworthiness.
And will he be willing to repay when we give him the money? Those are the two questions that a typical creditor or a lender will want to be able to answer. If they're able to answer that and say, well, he has the capacity to borrow, and from history, is able to be able to repay the loans, they'll be willing to give out loans. After all, they are in the business of financial intermediation. Collect deposits from those who have and don't want to spend, and give to those who need money, but they don't have the money. That's all what banks are supposed to be doing, right? Okay, so what then happens is that credit reporting infrastructure is what the world has now established to address this. So a third-party infrastructure, a company or a vehicle, we call it infrastructure because it's supposed to stimulate, to enhance, So you have that, and then you allow every lenders in the economy, every creditors in the economy to submit data to that infrastructure called the credit bureau. So the credit bureau then becomes a vehicle that everybody goes to access information. So I want to borrow, I approach my bank goes to that center and then looks at it and say, oh, he's already enjoying credit somewhere and he's doing well. Therefore, we are in capacity. He still have opportunity, he still has the capacity to take more. Or he's enjoying credit, but he's not been paying well. Therefore, we shouldn't touch that person. So once banks have that kind of information, because what banks need is information about the customers. But they don't normally have this information because they don't know where the customer is doing transactions. So the credit reporting system is that mechanism that brings all this information together and by a neutral third party, maintained by a neutral third party like CRC Credit Bureau. And then every institution that wants to give credit, grant credit, goes into that system, look for the information, and then use the information for many things. But first of all, to even look for those who are good enough to be giving loans to. Second, to provide those who have applied for loans and see whether they should be granted loan or they should not be granted loan, and how much they should be granted. Third, to help them to, have a price around the loans. Because if somebody is a high risk from the information, then that person must pay higher interest rates, even if you are going to give the loan to the person. But if somebody is a very good person, good credit score, and maintains his obligations when they are due, he should be able to enjoy a relatively lower interest rate. Right. Okay, so we have all of that. And then, of course, when they have granted loan, the same system, the credit reporting system, enables them to monitor what is going on as in the life of the credit itself. And if for whatever reason the credit goes bad, the credit system also enables them, assists them to collect and go after and recover the loans.
Can you tell us about CRC Credit Bureau and how it has contributed to the evolution of credit and credit reporting in the country?
First of all, we have the passion to say, okay, it's like a gospel, it's like an evangelism to us in CRC to say, we can impact life. We can get people to become economically empowered. We can liberate people from shackle of property. We can use information to profile people and get those people to then have access to credit. So we see it as a passion. It's like a call as far as we are concerned. And that's the way we have taken the job. And that's the first thing. That's the foundation of all that we do. Okay, and then of course, we then participate in making sure that all regulations, laws that the government tries to bring into to make sure that the industry is well established, that we are very active in it. Now, having done all of that, so we were involved in regulation, we were involved in advocacy, we were involved in credit awareness creation, about credit reporting, which is about responsible lending and responsible borrowing. Now, so we then have to see, our job is to have data that then becomes information that lenders and creditors will use. So we went all out to have that. Today, CRC is the largest and the biggest credit bureau in Nigeria.
So as we round off now, you talked about Nigeria only attaining about 14% penetration in terms of credit, and you talked about South Africa being at almost 100. Just how soon can we get to that level?
So there are drivers of access to credit and their infrastructure. So one of them is the credit reporting system, which Nigeria has established now. And like I told you, that's even what enabled us to be able to where we are today. In 2009, 2010, we were on 4%, 5%. Level of non-performing loans was about 33%. Today, non-performing loans is less than 5%. Today, we have consumer loans. We have all manner of players in the credit space as we speak today, just on account of just one of those infrastructure, which is the credit bureaus. But there are others that have to complement it. Where government has started some of them, including means of identification. You can't know profile of people unless you know who they are. How do you know them when you cannot establish who they are? You don't know where they live, you don't know what they do, you don't know their names, you don't know their date of birth, you don't know their addresses. These are information that you have in a unique identifier. And so the day every Nigerian has a means of identification, that day will revolutionize access to credit, because it will not complement. It now become very good, resource that the bureaus need to even do more than what they are doing presently. What facilitated BVN was us as credit bureau to say, okay, you come to Nigeria, some people have international passport to identify themselves, some have driver's license, some have tax number to identify themselves, some have pension number to identify themselves. We don't have any one single one. And up to today, it's still fragmented like that. Because the NIN that's supposed to be the unique one for all of us is yet to go around. And so it's very important that we accelerate, unique identification for every Nigerian. And then it democratizes access, not just to credit, but to a lot of services that you want to have. All what you need is, what's your number? Like they have social security number in a lot of advanced countries. Like India has now ID for 1.4 billion population. Why can't we have unique ID for 216 million Nigerians? Why is it taking us 10 years to do that? So that is very important as a second factor that will help that process. The third factor that will help that process is our legal system. People should be able to get justice. And justice should not be served, it should be seen to have been served every time. So if there is, lending is a civil thing. It's not a criminal act. And so once people are involved in things that leads to adjudication and leads to court of law, they find themselves in years in court. By that time, the whole essence of the transaction is defeated. So it makes lenders to be really very reserved and very, very conservative in granting credit or even giving you things on credit. Because they know that once there is an issue and you go to court, you can be there for ages. And then that will be justice denied. So we need to work on our judicial system. We need to ensure that there is a change in a way that people get judgment, they get justice as fast as possible. So that's where I know I've provided you, I find you okay, I give you credit, or I give you my goods or service on credit, you refuse to deliver, I take you to court, you have pledged an asset, I can realize the asset within 1 week. But that's not what we have now. And so those three things are what makes an infrastructure that enhances access to credit for individuals, for SMEs in the nation. We have only one working well, and that's the credit reporting, the credit system. So we still need to work on the other two. They are still work in progress. A lot of effort has been made in the direction of unique identifier, and I know we're on it. I'm saying we can accelerate it, we can fast forward it, we can really make it work faster. We can make everybody to have it at a faster rate than where we are today. I mean, if India could do it within few years, and there are over almost 1.4, 1.5 billion people, why can't Nigeria do it within 2 years? Okay, so that's it. And then, of course, the judicial system, there's a lot that's going on in that space that is beyond me and you. But I know things can be done to make sure that people get justice. And once people can get, especially on commercial transactions, that day, then things will change, including bankruptcy laws. How many Nigerians have you seen that declare themselves bankrupt or that have been declared bankrupt? Hardly do you see it. It's not supposed to be a big deal. But those are the things that drive transaction. Those are things that make people to believe they can do transaction. And if anything goes wrong, the law will be there for them to support them to realize what they are supposed to realize. But we are not yet there. But like I said, the cup is half full, it's not half empty. We are almost there.
Thank you so much, Dr. Kpokbola, for finding time to join us on Business Insights on PlusTV Africa. We do appreciate your time.
Thank you very much for having me.
I hope you found that particular interview insightful. But that's the size of the show for this week. I am Justin Akadonye. See you again next time.